Hey guys, Chad Shoop here. Welcome to my latest edition of Bank It or Tank It. And as many of you know, if you've been following me, I've had to adjust these videos quite a bit because of the volatility that we're seeing in the market. It's no longer really about banking it or tanking it. Instead, we are going to focus on companies that I like in the stock market, companies that I would consider bank it stocks, meaning that I like these companies over the next 12 months. And with the volatility that we've been seeing, the sell-off that's been going on, these are stocks to put on your radar, and once we get into the price charts, I'll have key levels for you to watch to let you know when it's time to take action and jump into the companies like the one we're going to talk about today. So today I actually put up a poll on Twitter for people to vote on to let me know what stock you wanted me to cover, and I got several great comments, so I appreciate everyone who took the time to leave me a comment. I'll add those stocks to my watch list, and if you voted, I really appreciate it. You helped me decide on the company that we are going to focus on today, and that's Canopy Growth Corp. And this was actually recommended by David back in February, so a big shout out to David for recommending the stock and putting it on our list to begin with. Now, before I dive in, I just want to welcome everyone. If you're new to the Bank It or Tank It series, just take a moment, scroll right below, click subscribe so that we don't miss out on any of my weekly insights or any of my weekly Bank It or Tank It videos. And as I mentioned, follow me on Twitter. I'm posting a poll there each week to see, as long as we can keep up the engagement and let you all vote on the next stock that I'll use for my Bank It or Tank It videos. So go to Twitter, you can follow me, leave me a comment on Twitter. You can use the hashtags Bank It or Tank It, and just let me know what you're banking or tanking in this volatile market. And I'll be sure to share how I feel about those companies as well, and share some charts on Twitter to help you see the key levels to watch with those companies. So our company today is Canopy Growth Corp. It's in the cannabis sector, which is a little out of my specialty. So I was actually communicating with our expert in this industry, Anthony Planis. He has his own YouTube channel. Right below this video, I have links that take you directly to his channel, and you can watch videos that are directly related to Canopy Growth so that way you can get more of this fundamental high level view of the company. Because as you know, when I dive into these stocks, we look at the fundamentals briefly, we look at the sentiment, and we look at the technicals on the price chart, which are my ultimate reasoning for either banking a stock or taking it. Usually comes down to the price chart, because the fundamentals, we go pretty high level and quick, and the sentiment is just a few numbers that we want to take a look at to understand the sentiment behind a company. But when it really comes to the story behind a stock and the big fundamental picture about what the company is trying to do in the industry and all the growth opportunities for them, our colleague Anthony Planis does a really good job diving into those details and really explaining the benefits of a company like this. In the video that I'll link you to below, he looks at Aurora Cannabis versus Canopy Growth. So it's a great take on two different companies in the cannabis sector, and he lets you know which one is his favorite. So let's start with a few key stats for us to run through. The two main stats that I like to review are the revenues, which are in the blue bars on the chart, and the key is on the right-hand side, and then the net income, which is the line graph on the chart, and the key for that is on the left-hand side. So these are the two main components that we take a look at here in our Bank It or Tank It videos. And when you look at the net income, it has the zero level on the left-hand side of the chart. So you can see that they're not generating positive net income at the moment. They're running at a loss. And that loss really took a turn for the worst in 2019. But you can see the analysts expected to start to trim that loss quite a bit in 2020, 2021, and beyond. And likely a big reason behind that is the steady slope up in revenues. And you can see they have 2019 on the bottom twice, first in March, and then in December is the update of 2019, because we haven't got to March 31st, the report for 2020 just yet, but it shows you that in their last quarterly report, they were well on their way to achieving the expectations that they set out for the March 1st, 2020 stats. And then they're taking a bigger jump in 2021 and then 2022. And a big reason behind this revenue push is their likely expectations to dive into the U.S. sector. Canopy Growth is a blue chip stock based out of Canada. So they really haven't even penetrated the U.S. market yet, but they do have plans in 2020 and beyond to really penetrate the U.S. market. But right now, it's a stable blue chip cannabis stock that's based in Canada. And the part of that revenue growth is expectations for them to be able to tap into the U.S. growth of the cannabis sector. And while normally I don't like to see the net income in a negative, I understand that this is a young industry, whereas the legalization behind their products and their opportunities that for them to grow are just now starting to come about. And I believe that it's going to continue to expand and giving them more chances to have their products in more stores, and they're recently are working on a new beverage product of infused cannabis. So they have some unique products that they'll be bringing to market in the next year or two, and that's going to help drive growth. And definitely the big push into the United States sector will help drive sales in the coming years. Now, normally we would flip over and dive into the quick comps for Canopy growth, but because the industry is so young, they really don't have that many metrics for you to follow. But our colleague, Anthony Planis, the expert on the cannabis sector, he has his own metrics that he tracks personally for these sectors, for these stocks, to help you have an understanding of which ones are doing better or worse. So again, I just urge you to go check out his YouTube channel, check out that video that we have a link to below where he looks at Aurora Cannabis or Canopy growth, and then I really give you a good understanding of how Canopy growth is developing, the type of products they want to bring to the market, and just some of their opportunities, how their cash flow looks, how their current cash balance is compared to the other peers in the industry. So for the quick comps, I really just direct you over to Anthony's video to check that out, because that's really going to have a better understanding than what I've been pulling up lately for our quick comps in the Bank It or Tank It's, because these companies are just so young, and most of them are foreign based, not too many that are mainly listed in the US. They either started in Canada, and then that kind of throws off some of their reporting for the history of the companies for us to run some analysis on. So just check out Anthony's video in the section below. So now let's take a quick look at the analyst ratings for Canopy growth. Overall, they have an outperform rating. This is out of 21 analysts that, according to S&P Capital IQ, the platform I use, they have rated the stock on average as an outperform, 2.38, with 1 being a strong buy, 5 being a strong sell. So the analyst industry is fairly bullish on the stock to have it rated as an outperform. And then once we get into the price chart, that might tell you a little bit about why, because this stock, even before the recent volatility that we've seen in stocks, has been on a massive sell-off. And as far as a value play in the cannabis sector, I mentioned that this is really a blue chip stock for the sector because it's been around a little bit longer than some of these younger companies trying to capitalize on the growth opportunities in the industry. So that gives Canopy growth a little bit of an advantage, and likely why it has an outperform rating here by the analyst recommendations. Now let's pull up my favorite part, the price chart, where we dive into the technicals for Canopy growth to see the key levels to watch. Now you can see on this long-term chart here of Canopy growth, just really puts in perspective of what we've been seeing over the last several months and really over the last year. Because this is a stock that started out back in early 2014 when it was listed in the US as a small cannabis company, really not doing too much. But over the years, as we've seen cannabis and the whole marijuana sector really blow up and start to be legalized in different states and different countries and just have a lot more opportunity for growth, we've seen the share price for these stocks really explode over time. I mean, this went from just a stock that was trading at just a few dollars a share to more than $50 a share in just a couple of years. So it's a huge ramp up in growth for the company, for the share price. But we've seen that come crashing back down here over the last 12 months. It was started before the volatility that we're seeing in stocks today, even though you can see that sell-off on the far right-hand side of the chart. But even before that, these cannabis stocks were really coming back to earth. And that's great to see because they were in a massive bubble. We had this huge explosion in share price and share value. And it was all based on just more legalization and more growth opportunities. But clearly they got ahead of themselves. Now, shares would have probably settled a little bit higher than they are trading at today had we not had the volatility, the massive setback based on the coronavirus. But still, you can just use this chart just to have an understanding that it did go through the bubble phase. The bubble popped, and now it's going to be in kind of a price learning phase where it's trying to figure out where it should really be valued, what these growth opportunities are really worth. But again, Canopy growth, more of a blue chip stock in the sector. So I think it's going to find value here soon. And then let's take a look at another price chart that I have put up. And this one goes back to our key levels that we want to watch. And we have the 200-day moving average, which I throw it on here. A lot of times it'll act as support or resistance. It's in yellow. But one of the main reasons we use it is also as a sentiment indicator. And when the 200-day moving average is declining and then the price is below the 200-day moving average, that's a bearish sentiment indicator, meaning that investors are not really buying the stock right now. It's definitely in a downtrend, and that shows by the price being below the 200-day moving average and the 200-day moving average trending lower. But now let's zoom in and take a look at my key levels. I have two resistance lines that I want us to pay attention to. The first one is this steeper one because it's forming a wedge pattern with the key support down here. And it's also going to be the first resistance line that breaks. That's going to give us a bullish confirmation on the stock to actually come in here and buy shares. So I don't actually recommend buying the stock today because we haven't broke out of this downward price trend just yet. And even once we break above this, there'll be even more resistance at this resistance level. This was a gap lower. Then it held as a key downtrend level for the stock. And shares could hit some resistance once they get back up to this price. And you're also going to have the 200-day moving average that's coming down through here, that even as price starts to climb up, it's going to have to meet the 200-day moving average as a resistance and this other downtrend. So it's got several resistance levels, which is usually the case when a stock is trying to break out of a downtrend. So it's not a complete reason just to avoid the company, but it is things you want to keep an eye on. And like I said, first things first, we want to see the stock break out of this very steep downtrend that it's stuck in. Once it breaks out of that, then I think the stock goes on your radar to start adding shares in your portfolio. Until then, you might want to hold off and just pay attention because you're not really going to be able to pick a bottom in here. I don't think that the market in general is done selling just yet. I think we'll see a bounce at some point. We're going to see a bounce this week or next week. At some point, we're going to see a sustained rally that lasts more than just one day in the stock market, but it's not going to be the ultimate rally that is going to get us out of this downtrend that we're stuck in. We're going to test the lower lows for the broader markets, and that's going to drag stocks like Canopy lower because this was a stock that's had to close up their shops in Canada. They're having to slow their plans down in the US. So they're really taking a major hit, as well as the rest of the industries across the whole United States. They're taking a major setback here with what's going on for the coronavirus and the lockdowns and the quarantines. So I don't think that's played out yet through the stocks, but this is one that I want to bank on, that we're going to have on our radar. We just want to see it break out of that downward resistance zone before we look to add shares to our portfolio. Now it's time to run through my checklist for Canopy growth. We looked at the fundamentals, and even though net income was negative and it had a big drop in 2019, the expectations were for revenue to help drag that higher in the coming years, and I believe that's going to be the case. Even though we're going through a setback right now with the coronavirus shutdowns, in the coming months, things are going to start to get back to normal. Canopy growth, if you check out Anthony's video, you'll understand that they have a large cash pile to help them weather through this storm, and then they'll be able to come out even stronger on the other side of this as they look to take their push into the United States and into new products. So they're going to get a check mark for the fundamentals for Canopy growth. Then when we looked at the sentiment, it was a bullish rating by the analyst community, but we could look at the price chart, and because it was below the 200-day moving average and it was trending lower, that tells us that investors are really not buying into their recommendation of having the stock as a buy. So right now it's going to get an X as far as the sentiment goes. And then when it came to the price chart, it's trending lower. It's in a downtrend. I'm just going to give it a check, but it's based on the fact that it's got to break out of this downtrend that it's in. That key resistance level is when you want to add this stock. So it's going to be on our bank it list for today. And again, all the stocks that I'm covering over these next few weeks are going to be stocks that I want to bank on during this volatile market, because I want to find opportunities for you that are a little bit beyond the bigger picture here, the Disneys, the Apples, and even Netflix or Microsoft or Google. These are all great companies to add on the massive sell-off that we're seeing. And I don't really recommend getting into the Delta or Carnival stocks because they're just a little bit overblown and there's too much uncertainty right now. I know they dropped a ton and it's very tempting to come in there and buy those stocks and maybe adding a little bit here and there, but I wouldn't go all in. Like I said during the video on Canopy growth for the price chart, I think the stock market's got another leg down for us to go, and I think that could really take those stocks, the Deltas and the airlines and the cruise ships, could really take them down significantly from where they are now. I know they've already fallen 70 or 80%, and it feels like they can't fall much more, but trust me, they can. They can fall another 70 or 80% just like that. So don't think that they can't fall any further. If you're buying into these, just continue to expect volatility, and we're in a unique stock market at the moment. It's a bear market, and that means that we got to trade it a little differently. I've been adapting even in my premium services. I have one that didn't trigger a new trade based on the strategies that I like to follow, but I've been able to introduce bonus trades over the last few weeks to continue to generate profits based on the pullbacks, based on the volatility in the stocks, and then add a few critical long positions to hedge our portfolio for when we see the bounce higher. We'll be able to take some gains off the table while we're making money from the downtrend. But the reality is that that's only possible because we're trading options. We're able to capitalize on these short-term moves. So if you're new to options, or if you want to learn how I'm trading options, then click this little icon on the top left of the screen. It's been up there the whole time, but if you see it up here, it's a little you click on that and it'll take you to a video where I put together a free training on how to trade options that lets you know the approach that I take and how we like to capitalize using options in a volatile market like we're seeing today. And be sure to follow me on Twitter. On Twitter, I post a lot of content as far as what's going on with the market, whether I'm buying this rally or selling that rally, and letting you know just my overall view in short of this quick take segment that Twitter is made for. And I have a new poll up for this next week's Bank Your Tank It, so be sure to go to Twitter. Let me know what stock you want me to bank your tank next week. So don't forget to scroll right below this video, click read more, and check out Anthony Planis's video on the cannabis sector on Canopy growth. He's got a lot of great content on his channel, so be sure to go over there and check out his videos. And then don't forget to subscribe so that we don't miss out on any of my weekly insights or my next Bank It or Tank It video. So that's all for today. Thanks for tuning in. Until next time, I'm Chad Shoup.